The 52-week high. What is it and how does it work? A 52-week high is a technical term in the stock market that refers to a company's most recent share price. If a company's share price has gone up from its previous year's high, it is considered to be at a new 52-week high. For example, if Facebook Inc. had $120 per share last year and $122 this year, then it would be considered at a new 52-week high. A company can also have multiple share prices for different time periods. For example, if Facebook had $110 in January 2017 and $115 in May 2017, then both of these prices would be considered as new highs for that company. With stocks that are trading at higher prices, it may be easier for investors to sell their holdings to take advantage of any profits. Investors in these companies may also prefer them because they believe they will continue to perform well in the future. However, stocks with lower prices may represent better opportunities for investors who want to buy low and sell high. In addition, some investors might choose stocks with lower prices as long as they think that these stocks could rise in value in coming weeks or months. A 52-week high can be found by using any one of a number of websites which track company prices, or by entering a company's name into the search bar on Google Finance. These websites will show you when that company's stock reached its highest point over the last year, and it will also provide you with information about what caused this spike in price, e.g., if there was an announcement about an upcoming product release. Subscribe to Investor Web to get videos on investing tips, like and share the video with your friends. See you next time.